The Trump administration is preparing to sign an executive order that could change how Americans save for retirement. That change allows 401ks to invest in alternative assets beyond traditional stocks and bonds. And while the initiative aims to modernize the U.S. retirement system, that move comes with significant risks for investors. And many Americans don't realize that they already have access to safer, time-tested alternatives in a precious metals IRA. Now, in the U.S., employer-sponsored 401k plans are certainly among the most common and popular ways for working Americans to prepare and save for retirement. Employees contribute a portion of their salary, storing it away for retirement years to ensure they actually have something to live on beyond their working years. Oftentimes, employers will match those contributions. The funds are invested in publicly traded stocks and bonds with very limited options, and those funds grow tax-free for decades until retirement. Now, as of 2025, Americans held almost $9 trillion in 401k plans, with the vast majority of that money invested in simple mutual funds. The Trump administration's initiative would allow 401ks to invest in a variety of alternative assets, including private equity, venture capital, real estate, hedge funds, cryptocurrencies, and of course, gold and silver as well. One of the reasons that 401ks have traditionally been limited in what their investment options are is that there's this inherent need to invest in low-risk options to ensure that investors' funds are safe and secure for the long term, even if they grow a little slower than they otherwise would. Many of the new investment opportunities are typically very illiquid, they carry high fees, and they tend to lock up funds for long periods of times. Advocates argue that this opportunity to diversify portfolios is a good thing, but many alternative assets can offer higher potential returns. However, they also carry substantial risks. Experts caution that the complexity of alternatives actually makes them a very poor fit for the average retirement investor. Brian Payne of BCA Research summed it up very clearly. He said, when you get retail investors involved in opaque markets with very different liquidity structures, very different risk, and ultimately different assets and strategies, it typically doesn't end well. That said, the opportunity to diversify portfolios beyond stocks and bonds and paper assets already exists, and it has existed in precious metals IRAs. And while these new alternative investments tend to add risk, gold and silver have historically been seen as a way to hedge and reduce risk, and may be a much better option for investors to diversify and protect in this current economic environment. Interestingly, the push to allow alternatives in 401ks is seen as a tailwind for gold and silver. Philip Streibel of Blue Line Futures called it a bullish catalyst for gold and silver as more investors seek to protect their wealth. And he noted that since COVID, the traditional 60-40 portfolio between stocks and bonds has failed to keep up with inflation. And that even a small allocation of precious metals, or gold specifically, has historically improved portfolio performance. A report from FTSE Russell found that from 2010 onward, a portfolio split of 60 stocks, 20 bonds, and 20% precious metals delivered a better risk-adjusted return than the classic 60-40 split. So exposure to gold in a multi-asset portfolio actually enhanced returns, especially in environments where traditional bond equity hedges have broken down. Now, physical gold offers tangible, liquid, and historically stable hedges against inflation and market volatility, and that's qualities that other alternative investments just can't match. Unlike private equity, gold is a physical asset with clear pricing and established markets. Gold can be sold quickly if you need cash, unlike private equity funds that lock up your money for a decade or more. And gold IRAs actually operate under very established IRS rules. They don't carry that complexity or hidden risks that private equity tends to. And gold has long been served as a store of value, particularly during times of inflation and market stress. The Trump administration wants to expand ways that Americans can save for retirement. However, that push to allow alternative investments in 401ks isn't without its risk. Private equity and other alternatives may offer higher returns on paper, but they also come with illiquidity, opaque pricing, high fees, and of course added risks that many retirement savers just don't fully understand. And so if you're looking to diversify your portfolio, you're concerned about what you see in the economy, you want to be out of investments that are just stocks, bonds, and dollar-based, I'm Mackay Block with American Hartford Gold. Give us a call today and we'll discuss how adding physical precious metals into your retirement portfolio can actually give you that diversification that you need.
Discover how gold can help you protect yourself and your family. Call today or visit our website for more information at AmericanHartfordGold.com.